Hi, I'm Roger Montgomery from the Montgomery Fund, and welcome to this week's video insight. The opportunity to invest is ever present, but so is the opportunity to invest at better prices. Currently, a lot of noise is being made about value being presented in the banks, and that's because their share prices have fallen. For example, the ANZ is now down 16.5% from its highs, the Commonwealth Bank is down 11% from its highs, National Australia Bank almost 18%, and Westpac just over 19%. But value isn't immediately presented just because share prices have fallen, and in a moment I'll give you our estimated intrinsic values for the four banks. It's important to understand though where and why the banks are so expensive, because generally they are. Fads come and go in the marketplace, and one of the fads that's recently been in place is the chase for yield. This has come about quite simply because interest rates on term deposits are declining. As the Reserve Bank of Australia continues to cut rates, they may decline even further. The whole point is to get people moving out of cash and spending their money or investing it elsewhere. When you have a look at the yields for the banks, the ANZ 5.69%, the CBA 5.36%, and remember these are franked, the National Australia Bank 6.4% and Westpac 6.4%, it's hard to tell which bank is cheapest and which offers the best prospects. And that's why many advisors suggest you just buy a little bit of all of them. But such a strategy is a mistake, and it's important to know where intrinsic value lies. Despite the falls for ANZ, or actually as a result of the falls in ANZ's share price, its share price today is about its intrinsic value. We think intrinsic value is around the 26.55 level. The CBA, however, has only fallen 11%. Its intrinsic value is still $10 below its current share price of about $65. The National Australia Bank, it's trading at $28 or thereabouts. Its intrinsic value is about $1.25 below that. And Westpac's intrinsic value is still below, significantly below its current share price of about $27.50. So with the exception of the ANZ, all of the banks are still expensive compared to our estimated intrinsic values. Importantly, we also look for discounts to those intrinsic values and keep in mind that credit growth still remains low. Also keep in mind that the banks have been a vehicle for overseas funds to invest in the Australian dollar. If they believe that the Aussie dollar might decline further, they may also sell the Australian banks. This means that you should chase the fad for yield with some caution. We certainly are. That's all I've got for this week. I look forward to seeing you next time, and in the meantime be sure to follow us on Facebook and Twitter.